discuss the world markets then and talk about all of that money flow and where it's likely headed. Steve Englander, a Standard Chartered Bank, now joins in. Thank you so much for taking time out, Global Head Forex Research. And Steve, just to put things into perspective, finally you do have the China markets having opened up. And I just want to understand, we had those huge stimulus measures that were announced and that have continued. What is that spelling out when it comes to the money flow in the global markets?
Well, markets are still trying to figure it out. There was a series of announcements a couple of weeks ago. We've seen the Chinese equity market, rally really spectacularly. Investors are waiting to see what the follow-up will be. And there has been some expectation that they'll do fiscal policy. Today's press conference, it seems a little disappointing so far. So I think in all markets, what we're seeing is investors pulling back, trying to assess the risks and trying to figure out which theme is going to be dominant in coming weeks, whether it's the China theme, the U.S. economic theme, the oil market and the geopolitical theme. And I think the investors are going to be a little cautious until they they see with clarity which of these is going to be the driver of global markets.
Oh, well, yes, the clarity is missing at the moment, even though, of course, we do have clarity with respect, of course, the rate action coming in. But do you think the, flight that we are seeing to China at the moment, Steve, is just tactical in nature and it's not going to last too long? Because we've already seen almost a 25-30% bounce in a lot of those, headline indices there. How long can it last, you believe?
Well, I think initially the market was very skeptical of the policy moves. Then when they saw the commitment on the part of the Chinese authorities, they went into it with both hands. Now they're waiting, waiting to see if there's going to be any follow-up on the fiscal side in terms of real economic stimulus to get GDP going. Today that theme isn't having a great day, and that's why CNH is at the bottom of the league table. Aussie dollar is at the bottom of the league table in terms of performance. But I don't think that the market has thrown in the towel yet. That there's on the stimulus coming out of China.
Okay, fair enough. Just give us a sense as well as to what your outlook is then in terms of how you even see the trajectory when it comes to crude oil prices as well, because that has been rising. The Treasury yields seem to have weighed on market sentiment to a great extent. How do you look at all of these moving parts?
Well, as I said, things have changed, quite sharply over the last couple of weeks. I think the oil market reflects the situation in the Middle East, and it's the 1-year anniversary of the attacks on Israel, and we've been at war in that region ever since. It doesn't look like it's getting settled. So I think that the markets are nervous that it's getting closer to Iran, closer to having a direct impact on oil supply, and that's part of the oil trade. It's not a risk-on buying of oil; it's a risk-off buying of oil. So I think it remains to be seen how that plays out. The other kind of question mark is the U.S. economy. We thought we knew the story, that the economy was slowing and the Fed would be easing with both hands. In the aftermath of the non-farm payroll numbers, the market's become a lot more cautious on how far the Fed's going to go.
All right. Yes, indeed. That is going to be closely watched. Thank you so much for taking time out, Stephen, giving us that view on what the Chinese markets opening up spells out. But
there comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.